We just witnessed something that almost no one had on their bingo card this year. The 10-year Treasury yield just collapsed below the federal funds rate. For those of you who aren't finance nerds, what does this mean? Buckle up, because the market is flashing a massive warning sign. The bond market is telling us risk off, danger ahead. And there's many other indicators that are telling us that there's stress in the system. I mean, Jamie Dimon just sold $233 million worth of JPMorgan shares. Warren Buffett and Berkshire Hathaway are sitting on $344 billion worth of cash. And Bitcoin is crashing to levels we haven't seen since November. Bag holders are waking up to their portfolios like, Now, young ones, I'm here to calm you down. This is par for the course in Bitcoin, which has had 16 drawdowns of more than 30% over the last 15 years. In the long term, it doesn't matter, because everyone globally is figuring out the system is rigged, even Tucker.
I mean, it's kind of like a rigged system, right? Like the government is issuing the debt, which is held in a specific currency, but that same government prints that currency.
Yeah, and that's why they're so hyper focused on the Fed managing inflation. I know it
doesn't make any sense. It's like kind of a rigged game.
It is.
My ignorance protects me from bad investments because, like, if it doesn't make sense, I'm not that I invest, but like, you know what I mean?
No, and intuition is to be trusted.
Well, that just doesn't make sense.
That was ultimately why I first got interested in gold.
Because the key question is not, do you get paid back what they owe you? The key question is what you just said, which is, what is the value of what they pay you back? You may get every dime back, but maybe those dimes aren't worth anything.
Well, and
they determine what the dimes are worth. So it's a rigged deal.
Bingo. That's it. When you zoom out, there's nothing to fear. This system is collapsing. And you know what also this 10-year yield is telling me? That rate cuts are coming. Today, we break it down and talk about why the Fed might be forced to pivot and cut rates faster than they expected. Time to eat your veggies and understand the larger macro picture going on here. This is Dante Cook with Bitcoin Simply. Let's go. People are underestimating all that's happening right now. As an analyst and a cultural commentarian, I'm giddy right now because we're witnessing some of the craziest things that are happening in the history of finance all at once. The largest source of liquidity in the world right now, the United States government, is being disrupted and almost completely cut off in some instances. This clip from Vivek Ramaswamy is just one small example of the changes that are rippling all throughout the United States and the world right now.
We need to bring down the income tax, eventually down to zero, because you deserve to keep what you earn. It is your money, not the government's. We need to bring down property taxes in this state immediately, eventually down to zero. If you own land, it should not feel like it's a lease from the government, and yet so many Ohioans are paying as much in property taxes as they are on principal repayments on their mortgage. That is wrong, it is un-American, and it will end one way or another on my watch as your next governor.
People are yelling and shouting in excitement, but not realizing that billions and trillions of dollars in capital flows are being completely shut off. Brand new polling says that 67% of the American people say that the federal debt spending is unsustainable. And 60% say that Doge is helping to make these major cuts. But what they don't understand is all of the ramifications of this. Steve Cohen, one of the largest hedge fund managers in the world and owner of the New York Mets, breaks down and captures what I think is happening globally that people are misunderstanding about markets right now.
This is one of those moments where there's really a lot of uncertainty, and I have pretty strong views here. When you take it's a brew of tariffs. I mean, tariffs cannot be positive, okay? I mean, it's a tax. And you can imagine tit for tat if the U.S. does something, implements a tax on somebody, somebody else is going to, perhaps raise the stakes and raise their tax back. So taxes are never positive. On top of that, we have slowing immigration, which means the labor force will not grow as rapidly as previous over the last, say, 5 years. And in addition, now you have Doge, right? And you know, wherever you lay on the Doge issue, I mean, that's austerity. And austerity, when that money's been coursing through the economy over many years, and now potentially will be reduced or stopped in many ways, has got to be negative for the economy. So you have tariffs, I could see a situation where we think growth is going to slow to 1.5% from 2.5% in the second half, and yet the unemployment rate is actually going to go down, which because of slowing labor force. And so, there may be offsets in Doge, and that needs to be considered. But the reality is you've got a brew of sticky inflation, slowing growth, and austerity in the government. And so I'm actually pretty negative for the first time in a while. I don't think it's going to be a disaster, but I do think, given where investors lay, how committed they are to the markets today, that I think we're seeing a regime shift a little bit. And it may only last a year or so, but it's definitely a period where I think the best gains have been had, and it wouldn't surprise me to see a significant correction.
The sentiment of what's happening behind the scenes is starting to become apparent publicly and for everyone to see. The European Central Bank just posted its biggest loss in 25 years. And the Bank of Canada isn't too far behind, with a $6 billion loss. Listen to this clip to understand the financial mechanics of how central bank profits and loss statements actually work.
How much are taxpayers on the hook for the losses at the Bank of Canada?
Ultimately $6 billion at the end. So, as I said, very much contingent on interest rates. We do have legislation that's been passed now that lets us retain our earnings. Normally, at the end of every year, we would have remitted whatever our earnings were to the government. And once the assets that you described roll off our balance sheets, we will be back in positive earnings, and that will fill that overall loss. And then we'll be back to remitting to government. We expect to be back in a positive situation in about 2 years, and then we would continue remitting back to government.
So just to clarify, you say it was a $6 billion loss? Total.
Yeah.
So the Bank of Canada is losing $6 billion. Your point about rolling that into taking advantage of the new legislation that allows you to retain earnings, it still does have the effect that the bank will not be remitting, I guess, dividends, for lack of a better word, to the government. So that there still is a cost to the taxpayer.
Yeah.
What you come to understand when you watch this video is that the profits and losses of central banks around the world are only profits or losses based upon the interest rates of when they have to refinance the debt that's coming to maturity at that time. So basically, they need to just capture a paper loss or a paper gain based upon the interest rates at that time. And that's why central banks and governments all around the world need interest rates to come down. But you know who can't keep rolling their debt and kicking the can down the road? Real people in the real world. And that's why U.S. household debt reached $18 trillion at the end of Q4 of last year. That's why 64% of FHA loans for mortgages were above the 43% debt-to-income ratio, and why 7% of them were delinquent. And the United States government funded 562,000 incentives to loan servicers for all the delinquent mortgages that were happening. That's more than the Great Financial Crisis. People can't afford their mortgages. The VIX is also indicating warning signs as the VIX just exploded above 20 again. Even crude oil, going below its normal range of 70, is showing signs that there is stress in the market. And this chart may tell it all. Consumer confidence in America is plummeting while inflation expectations are shooting through the roof. But here's the real deal. You can look at these different indicators one by one. The only asset that you need to look at when it comes to measuring whether there's liquidity in the market or liquidity is drying up in the market is Bitcoin, the only true decentralized, non-sovereign global asset that effectively prices money and the cost of money everywhere in the world. Bitcoin is down over 20% from all-time highs, but it's up over 30% since November and up over 60% over the last year. This is a golden opportunity for us to get cheap sats. The grocery store is the only efficient market in the world. When prices go down, people buy more groceries, and when prices go up, they buy less. That's not how financial markets work. When prices go down, people sell. And when prices go up, people rush to buy in. You need to understand fear and greed and human psychology when it comes to becoming a good investor and looking at the large trends. And that's exactly what we're going to do in the second half of this video. But before we do that, let's go to our sponsors. When it comes to unlocking liquidity in your Bitcoin without selling your Bitcoin, the leader and the undisputed leader in the market is Ledn. Ledn has been the leader in Bitcoin-backed lending since 2018, issuing over $7 billion worth of loans to tens of thousands of customers. They were the first digital lender to do a proof of reserves, and they've never lost a single sat or a single cent of customer funds. The loan process is simple in that you need to post 2 times the amount of Bitcoin collateral in order to get a loan. The process takes less than 2 minutes to figure out whether you qualify or not, and you can have liquidity in dollars or your local currency in your account in less than 24 hours. Go to ledn.io/borrowing to get started on your loan process today and to unlock liquidity from your Bitcoin without selling. Our second sponsor to help you protect your generational wealth the right way is the Bitcoin Way. Members of their team will walk you through how you can take full responsibility and self-custody of this generational asset that we believe in called Bitcoin. You can remove your private keys and all counterparty risk by removing your Bitcoin from exchanges. And members of their team will help you walk through that process step by step and to do it the right way, privately, confidently, and securely. Go to thebitcoinway.com/simplybitcoin to schedule a free 30-minute consultation with their team. That's thebitcoinway.com/simplybitcoin to schedule a free 30-minute consultation with their team. Where we've been in terms of history in global macroeconomics is an absolute anomaly because the countries that run deficits typically are the losers when you step back and you zoom out at a grand scale. We've been running deficits for quite some time in America. But the reason why we've been able to establish and maintain our dominance in financial markets is because we've had the global reserve currency, which is the dollar. We're moving towards a post-World War II era of reshoring, of rebuilding America from the inside out, and instituting, I believe, monetary and capital controls in order to keep our debt problem under control while we build and enter into this new regime. Here's a great sound bit about this from Adam Taggart and Michael Every.
The long run of human history is that international trade and international relations have always been about protectionism, mercantilism, i.e. I run a trade surplus, you don't, and who controls the value chain, i.e. I get the cheap commodities to then add value to them, and I get the juicy end of the value chain curve. You don't. So, I'm rich and you're poor. And for the longest run, that's the way things were. Then for a lovely window, post-World War II, we had a US-built system versus the Soviets and the global South to an extent, which did very well for most of the West and the Western working class and middle class. And then at the end of the Cold War, which we won through having a very carefully ring-fenced economy where you could do some things and you couldn't do other things, we then had a true global economy for the first time. But if you really looked at it, first of all, you'd say, is this going to work this time? Because it's never worked before. Mm-hmm. And when you looked at the fact we then deregulated everything and said, because markets, it was evident immediately that you would have winners and losers inside every economy. So the rich would get richer and the poor relatively would get poorer. And you'd have winners and losers between countries, i.e. the ones who were still mercantilists, like China, earlier, like Japan, like Germany, which insist on running a trade surplus, which means somebody else has to run a deficit. And the losers, the countries running the deficits. So if you looked at the long run of history, you looked at the fact that the winners in some countries were doing better than the losers. And between countries, some were winning and some were losing. It was inevitable that it would eventually break down one way or another. And it has.
People are losing faith in the dollar and they're losing trust, and they don't want to back United States debt and treasuries. A strong dollar is causing pain for countries globally who have weaker reserve currencies. And a strong dollar impacts Donald Trump and this government's ability to institute its new policies, but also have a strong stock market and financial economy. So, what is the government to do? I believe it's to lower interest rates and to make the money printer go burr.
When they lose the bond market, that will be the big tell, and that will really light the fire underneath the hard money assets, gold and Bitcoin. And the reason that's the case is that if people start not buying the bonds and interest rates start going up, it makes the situation worse. As you know, that's the doom loop. That's the debt doom loop. The deficits get larger, et cetera, et cetera. So eventually they're going to have to do what they did in World War II, and they're going to have to say, hey, you know what? We're going to cap the interest rates at XYZ, or call it, in World War II, the case was 2.5%. But we're going to have to cap interest rates at 3 or 4%. And to the degree that they go above that, we're going to buy them ourselves. Well, okay, what are you going to buy them with? Well, we're going to buy them with the balance sheet and printed money. And so, so this is back to all roads lead to print or go burr. And when print or go burr, that's what creates the inflation. And so, it's a vicious cycle, that happened once before in the 70s. But, the debt to GDP then was 35%, not 125. And so Paul Volcker was able to shove rates up high enough to get it all under control. But I don't think this time they're going to be able to do that, because if they shoved rates up to 20%, the entire world would go bankrupt. So my view is we now live in an inflationary world, and people really need to think about that in the context of their investments and how they're going to protect themselves.
And this is why we stay calm and stack on in Bitcoin. We recognize the fragility of the system. The shifts that are happening with Donald Trump and this new United States government regime are too big to ignore. Tariffs, reshoring, onshoring, removing taxes, weakening the dollar, and establishing the United States as the creator and producer of goods and services globally. This will cause momentary disruption. This momentary shock with fiscal spending and government spending being slowed by Doge and other efforts by this United States administration is causing markets to have a bit of uncertainty in where and how to invest. But in the long term, it's going to be crystal clear. And the people who are willing to take risks and to be on the side that is controversial and not mainstream, and that's into Bitcoin, are going to be the ones who win in the long term. Don't overcomplicate this trade, and don't let the headlines of today or the price charts in Bitcoin impact you from understanding what's happening at a macro picture. If you want to learn more and understand what's happening not only with Bitcoin but in a macro picture, then I invite you to come down to Dallas, Texas to the BitBlockBoom conference from April 3rd through April 6th, where you're going to get to hear about Bitcoin and the macro economy and what's happening with strategic Bitcoin reserves and mining and all sorts of other things from your favorite speakers like me, Parker Lewis, Guy Swan, Marty Bent, Bob Burnett. It's going to be action-packed, and you're going to get to meet some of your favorite Bitcoiners that you watch on TV or podcasts or anywhere else in real life at things like our Saturday casino night. And I can't wait to meet you there. Go to bitblockboom.com and enter the promo code BBB25 for $100 off your all-inclusive ticket. That's bitblockboom.com/BBB25 for $100 off your all-inclusive ticket. I'm glad you got to learn a little bit about macro today. If you get value from these and you understand that we're not just going on the surface about Bitcoin, but diving deep into macro topics like we did today, please like this video, share, and also subscribe to the channel. This is Dante Cook with Bitcoin Simply. Happy stacking.